This is Paul Donovan from UBS's Global Economics Department. And so the calm, rational analysis of the world's equity markets continues. Asian equity markets have risen, despite earlier weakness. The Nikkei initially fell in the wake of the introduction of a ban on naked short selling, and indeed it breached the 7,000 level at one point. Short selling bans have, of course, shown their effectiveness time after time around the world. Wherever they are implemented, stocks have continued to slide. However, the belief that things might possibly be overdone has led to the standard strategy of reverse everything that you were doing. Consequently, the yen is weaker, commodities have recovered somewhat, and equity futures are more positive. Asian stocks have risen 5 or 6%, though, of course, 6% of not very much is still not very much. In the world of foreign exchange, Australia has confirmed that it intervened in the foreign exchange markets again today, having done so yesterday and Friday. The reason stated is to provide liquidity to the financial markets. This is traditionally a smoothing operation by the RBA. The Aussie dollar has recovered a little today, though it seems to have had little to do with the actions of the central bank. The rally coincided with the general recovery in the Asian time zone, starting some way after the intervention was announced. The search for bank capital continues. According to the Wall Street Journal, Barclays are seeking capital injections from 2 Russian banks. Of course, there is no shortage of capital for British banks, but Barclays are trying to avoid selling shares to the British government. This prejudice has seen them turning to Russia, though there is no sign whether this move has yet succeeded. Car companies are complaining around the world. Nissan's CEO has stated that if yen levels were maintained, it would sap competitiveness. Of course, Nissan seemed to cope with the 15% appreciation of the yen against the dollar over the past year. Quite why the current additional 5% move pushes them over the brink is not entirely clear. In the meantime, the razor-sharp intellects of the credit rating agencies have decided to downgrade the credit ratings of U.S. car companies. The Fed's meetings continue today and conclude tomorrow. In the meantime, we hear from former Fed Chairman Volcker. This is not something to overlook, as he is an economic advisor to Senator Obama. We'll get details on the absence of confidence around the world. U.S. consumer confidence is forecast at a 16-year low, with a 50 number foreseen by UBS, which is below consensus. There is more data on house prices out of the States as well, predicted down, of course. German consumer confidence from GfK is scheduled. The French ONSE consumer sentiment survey comes out, and if anyone cares about Italian retailers, their confidence reading for October is also due. The consequences of weaker confidence in the UK comes through from the CBI Distributive Trades Report, which gives an indication of sales volumes, and the UK too will get house prices from the Land Registry. Bear in mind that the confidence numbers are the first to feel the effects of turbulence. Real economic data traditionally responds with a lag. We have a smattering of speakers from central banks, Billy Schmarge of the ECB, Jeeve of the Bank of England, and Beasley of the Bank of England as well, who will be speaking in the intellectually refined surroundings of the UBS London offices. That's all for today. Have a good day.